The stock markets, New York Stock Exchange, NASDAQ, and global markets. The New York Stock Exchange was founded in 1792. The exchange was simply a marketplace where people could trade securities. The New York Stock Exchange is an open outcry marketplace where floor traders match up buyers with sellers. The New York Stock Exchange is self-regulated and controlled by a board of directors. Not all stocks eligible to trade on the exchange. Many of the largest companies on the New York Stock Exchange make up the Dow Jones Industrial Average. The Dow, or commonly referred to as the Big Board, reflects 30 of the largest blue-chip companies that represent different industries. The Dow is the most widely viewed indicator of the overall health of corporate America. The 30 companies that make up the Dow are AIG, Alcoa, American Express, Bank of America, Boeing, Caterpillar, Chevron, Citigroup, Coca-Cola, Disney, DuPont, ExxonMobil, General Electric, General Motors, Hewlett-Packard, Home Depot, IBM, Intel, Johnson & Johnson, JP Morgan, McDonald's, Merck, Microsoft, Minnesota Mining and Manufacturing, Pfizer, Procter & Gamble, SBC, United Technologies, Verizon Wireless, and finally, Walmart. The NASDAQ is not an open outcry system, but a computerized marketplace. It's one of the largest computerized trading marketplaces in the world. The NASDAQ Composite Index is made up of over 3,000 stocks. It is a representation of all domestic and international-based stocks that trade on the NASDAQ marketplace.
Hi everyone, I'm Mark from England, and I'm going to be talking about global markets. The United States, China, Japan, India, Germany, Britain, France, Italy, Russia, and Brazil represent the top 10 world economies by gross domestic product. The BRICS represent the fastest growing economies on the world stage at the moment. These are Brazil, Russia, India, and China. Once again, we will list 7 of the largest economies in the world. We will look at the GDP of each country. GDP measures the value of goods and services of an economy. We will compare the GDPs of 1973 to those of 2005. The overall value of goods and services in the United States in 1973 was $3,513 billion. In 2005, that gross domestic product figure increased to over $9 billion. America's GDP tripled between 1973 and 2005. Sounds pretty impressive, right? Well, look at China in 1973 with a $103 billion gross domestic product. In 2005, that GDP figure hit $1,624 billion. This marks an economy with a GDP growing by more than 15 times during the same time span. India, Brazil, and Russia have similar stories of tremendous economic growth. Now let's list the major global stock exchanges and the dominant stock indexes that investors watch to follow the relative health of each country's financial markets. In the United States, we have the New York Stock Exchange and the Dow Jones Industrial Average. China's stock exchange is called the Shanghai Stock Exchange, and the stock index is the Shanghai Stock Exchange Composite Index. In Japan, we have the Tokyo Stock Exchange, and investors follow the Nikkei. The Bombay Stock Exchange is the dominant stock exchange in India. The Bombay Stock Exchange Sensex 30 is a widely watched stock index. Germany's major exchange is the Frankfurt Stock Exchange. Investors commonly look to the DAX 30. In the UK, we have the London Stock Exchange, and investors follow the FTSE 100. France's stock exchange is called Euronext Paris, and the stock index is the CAC 40. In Italy, we have the Milan Stock Exchange, and investors follow the MIB index. The Russian trading system is the dominant exchange in Russia, and the RTS index is widely watched. Brazil's major exchange is the Sao Paulo Stock Exchange. Investors commonly look to the Brazil Bovespa Stock Index.